Lots to track and trade today. So here goes the first tick on the index. It's positive, 30 points higher on the Nifty. The sensex is up about 80 odd points. The bank Nifty is flat, but looking to build on to some of its gains. What's gaining today is Divi's Labs. I think it's had a really rough ride this year. It's down 15% for the year. So trying to recover over there. SBI Life, JSW Steel, Adani Enterprise, a motley bunch of stocks actually on the upside. But metals are looking good. So there's JSW Steel, there is Tata Steel that's up in the green as well. Hindalco is up in the green. So that space is not too bad. Apart from that, autos are making a bit of a comeback. Bajaj Auto, Hero MotoCorp, but some of them struggling because of the downgrades. We'll talk about that. Tata Consumer Products, Cipla, Grasim, a couple of other names that are in the green. L&T has been hitting new highs daily, so it's putting on some more weight. Keep an eye out on that. But Divi's is really the big one, up almost 2.5%. On the downside, Indices Bank down about 0.6% for reasons obvious. NTPC, Kotak Mahindra Bank, Infosys ahead of its numbers tomorrow is under a bit of pressure. Nestle as well down about 0.2%. Apollo Hospitals just a tad bit in the red, and Bajaj Finance too a tad bit soft this morning, so keep an eye out on that. But very quiet opening, you'd have to say, just about, struggling to build on to its gains further. 17,730. Sula is really the stock that's piling on the gains this morning, 6% higher. Nigel will talk about that, but flat opening for the market.
Well, that's right, Sonia. Let's pull up a couple of stocks, though. We have Sula that's up and about in today's trading session. It's up close to around 5.5% odd. But Delta Corp, the street had positioned itself for a weak set of numbers. The numbers were quite subdued as well. Business-wise, well, things could look up. So because of that positioning, actually, we're not seeing a negative reaction. The stock, I think, is in the F&O banner as well. So it's seen a fairly flattish start to kickstart trade. A couple of other notable movers. We had large trades yesterday. We're seen on Venus Pipes, where you have Mr. Ashish Kacholia that picked up a couple of percentage points in the company. So Venus Pipes, it has a bit of a discount in comparison to Ratnamani Metals, which is its larger peer. So that stock's up close to 2.5%. Sagar Cements, well, you had a big fund coming in there. ICICI Prudential, they went and bought that 4.5% stake. So that one opens up with a gain of close to around 2%. And Delivery as well, there was a large trade when Internet Fund PTE, that's Tiger Global, they sold close to around 1 crore shares odd. For the time being, seeing a bit of a relief rally. A few more stocks that are on focus. We have the management of Titagarh Wagons. They said that in the coming years, because of these order wins that they've had and the order win that they just announced with BHL, they'll be able to grow in double digits and margins in that vicinity of around 8 to around 10%. So that's up close to 2%. And also a couple of other names. Time Techno. Late last night, there was an order win that they announced on the exchanges. The order win comes in from IGL to supply CNG caskets for around 50 crores, smaller quantum, but it opens up, a new trajectory in terms of growth. I think the street likes that. That stock as well up close to around 3.5%. Prashant.
16 points on the Nifty now, 17,739, 17,740 odd. So this is a quiet way to start, another day, 7 days on a trot. The market's done well. Quiet day wouldn't hurt. Well, Adani Green is up about 3.5%. It's a top volume-led gainer on the screen. Adani Total Gas is up about 2%, 972, beg your pardon. Divi's Laboratories is up 3.5%. That's a big one. A big difference.
A bit of a shock there.
Yeah, Divi's is up 3% or so, 3,018. Sula, we were talking about that one, 5% on Sula, 371. Venus Pipes is up 3%. Titagarh, went up above 300. It's sort of just under that, but it's up $10 from yesterday's closes. Nigel also pointed out Prince Pipe is up 5%, 614 on Prince Pipes. Time Technoplus we highlighted. Dwarke Sugar is up about 2.5%. HEG is up about 2.5% as well. Market breadth is comfortable, 2:1, a little over 2:1 right now. Kotak Bank saw that big move yesterday, and this morning Mitesh told us buy it around 1830. Stocks at about 1835. It's down 0.5% or so. Indices is down 1%. Zomato is down about 1%. Only highlighting things with volumes at this stage. We've got Shilpa Medicare down 3%. 260 on Shilpa Medicare. Neogen Chemicals, that was a big mover, 2% lower. Chola Finance is down 1%. I mean, on the downside, there's not very much big at this point in time. I mean, I think there is more happening on the upside, even on a flat start like today, what we have. 5.6 points on the Nifty, 17,730 is where we are at. Atul Suri is our market master of the day. He's joining us right here in the studios, Chief Executive Officer at Marathon Trends PMS. Atul, good to have you with us here back in the studios. Thanks very much.
Morning.
I mean, we've had this rally, nice rally for the last 7 days or so.
7 days.
Not quite. So, is this the start of a bigger move, Atul, in your view?
See, as I see it, Prashant, there are 3 trends broadly. There are uptrends. Everyone's happy, good about it. It's very visible. You have downtrends. Nobody's happy. And you have sideways trends where we are all confused. And I think we are in that space.
I see.
You know, I feel that this sideways or consolidation is not just in India. It's global. If you look at US markets, if you look at the S&P 500, because that's how I call that mothership, it's kind of where it was a year ago.
3,800 to 4,100.
Absolutely. Or, you know, 4,200 is a breakout. It sort of gets you there and then it kind of deceives. So from that point of view, you know that we are in a sideways trend. The thing is, we are not used to seeing sideways trends for the last 10 years, thanks to the Fed. Each time global markets had a problem, you had interest rate cuts, money was thrown in. And now that is not there.
It's actually exactly been 10 years, because the last sideways market, extended sideways market we saw was between 2010 and late 2013, right before the Modi rally, right?
Absolutely. So these are very frustrating times, as they are today. Like, you know, you would see up, oh, US Dow is up, so we should be up 30 points. And when you open the market, nothing's happening. And the stocks you were mentioning, hardly, you didn't even have to have conviction. Right? It doesn't inspire any confidence because there was some volume. That's what you said. Can you imagine? So that's what the state of the market is. And these tend to be long, painful. However, the fact is that these are also very stealthy. When these turn around, just as in that phase, it creates a monstrous bull market. But before that, it will frustrate everybody. It will tire everybody. And when it happens, there's skepticism, there's doubt. Then people keep waiting for corrections. So when I look at global markets, I see that they're going through this kind of phase. This is also happening in the US. But the silver lining, see, I am bullish. I have much larger targets. It's taking some time. The reason is, what I do in such times, Prashant, is I look at something called a 52-week high, 52-week low ratio. So even last night, US, it is a 10:1 52-week high versus 1 52-week lows. So there's not much you can do with the index, there's not much you can do with the direction, but in that also there are a lot of stocks. You can still make money in sideways market if you are in that space which is kind of breaking out on the upside. Also, very often, as I said, nobody knows when the market as a whole breaks out. You'll find that the leadership that is visible today will actually lead the next bull market. And that, I feel, is changing big time. Like in US also, if you look at it, it is the industrials. And if you know, we don't have industrial, it will deceive. So as I said, pain and time are a part of it. So you can actually never time it. But the fact is that those who survive it, and more importantly, what I was saying, Prashant, the leadership, that actually tends to be very rewarding. I can take you back another time, you know, 2002, 2003. Why I'm saying that is that the themes or sectors that are leading or breaking out today were also the themes and sectors breaking out then.
So where do you see the leadership come from now?
Absolutely. That's the next question. Your capital goods, engineering, infra. These are sectors nobody touched. You spoke about L&T. What has L&T done for a decade? Nothing. It's been a lost decade for the stock. But the fact is that you cannot ignore such stocks. So very often what happens is that you will find that early breakouts or stocks that even are doing well in sideways markets very often lead the next bull market. Now, will this consolidation be W-shaped, U-shaped, L-shaped? Honestly, Sonia, we don't know, because there are so many moving parts. And even I tend to believe that, you know, I was in fact expecting the market sometime in Jan, Feb, and, you know, we've shared it. I was expecting new highs and it was roaring because India was outperforming. But I think we've taken a hit. I feel that the whole Adani issue also has taken the shine of India, because, you know, India was a big time outperformer. In fact, we were the only market hitting 52-week highs or lifetime highs for that matter. But you will notice that around 18,200, this is also where the budget was. We had a great budget. And you will find that the shine of India as a relative outperformer has also kind of gone. So I do think that we are also taking our time-wise corrections, but opportunities.
That's only right, because I mean, I was looking at some numbers from the lows of COVID, across asset classes. India ranks. I mean, this is including Bitcoin and whatnot, right? India is still right up there in terms of returns. Absolute returns from the lows of COVID across markets, across large markets, and asset classes. So some time correction perhaps is...
Absolutely, because look at December, Prashant. We were at 18,800 plus something, almost 18,900. And a lot of other markets were making 52-week lows. And that's when you understand that, that whole relative outperformance was massive. So India cannot just be, you have something called the tall poppy culture, that whichever poppy grows, that gets chopped off first. So to some extent, when nothing is happening, people were not making money anywhere. They had to book in some market where they were making money. And I guess we are going through a time-wise correction. It is frustrating, volumes will be low. But as I said, the silver lining is that what I do is look at 52-week high versus 52-week lows. This is what internals of the market are. And that's where you'll find sectors and themes. These sectors and themes not only make money for you in the short run, but I feel they become very big leaders of the next bull market. And this is a great time to actually do that, to do that transition in your portfolio. Most people are sitting with the leaders of the last bull market. Every bull market throws new leadership.
Right.
And in such times where there is no massive price moves, I think it's an excellent time to, churn. If you churn, I guess the next phase is favorable, or that's where you get outperformance. If you don't, you will say that, okay, the market's going up, but my portfolio is not going up, which is the standard narrative that happens.
Atul, good to speak to you as always. And 2010 to 2013, I witnessed that. But you lost me on the previous one because 2002, obviously, I wasn't tracking.
There are some kids. There are some new kids in the market.
But Atul, give us a couple of, you're telling us themes, leaders that you're looking at as well, maybe from the cap goods, the industrial space as well. Right. Is there an index you're looking at? I'm looking for levels out here, or a couple of stocks that you could share with us, which you're tracking closely, which are looking like, they could move up from here.
See, what happens is that the way indexes are available to us are pretty, pretty broad-based. Yeah. So what we've done at Marathon is that we've actually subdivided the market, the NSE 500 to 50 thematic indexes. Okay. So what I can tell you is about those thematic indexes and what they are throwing up. So even among cap goods engineering, it's a very big segment. Right. You'll find that electrical equipments, right? Now, you'll have to actually figure out, now, what is that? That's something very simple. Anyone can do. But you'll find that even in that, electric equipment is something that's doing very good. Okay. Then engineering per se, as a sector. Remember, all cap goods is not engineering. If you take the subset of engineering, you'll find that that also is doing very well. So you'll find that there are some themes. But the important part is that most of these themes are pointing towards the industrials as a broad category. Right. And the same theme you are seeing out of the US also. If you go and look at 52-week highs versus lows yesterday, you'll find that half of them in the US also are industrials. So in a sideways market also, some themes are playing out. And as I said, that very often these tend to be leaders of the next bull market.
Interesting. Atul, what about the commodity space? We had a fundamental analyst who was telling us that things are looking up in China, maybe for the property market. Sure. And that's why some of these metal-related stocks did well. Yeah. What's your view out there on commodities on the whole? Any particular commodity you're tracking?
No, I look at commodities very closely because they're very correlated with inflation and bond yields, which is the mother of all, signals of the market. So what we saw that a few months ago, that commodities actually all broke down. If you see crude, it went, let's say Brent, that matters to us, that went to 70. Yeah. 75 was a base, it broke down, the CRB index broke down, a lot of things. And it thought that that's it, the end of commodities. But all asset classes get very oversold, overbought. Yes. When they get very oversold, which we saw in the case of commodities, leads to a pullback rally. So crude from 75 just came up to 85 due to OPEC action and all. Those are stories. Right. That, you'll always have some stories to fill the narrative or to justify the price. The same thing we are seeing in metals. So it was due that a very oversold asset class has to see a pullback. The issue that comes up is that are they starting a new bull market? If that happens, we've got a problem, boss. We've got a serious problem.
So, I have a question on the overarching theme which we discussed, right, at the start. Of course, trends and all of that, sectors are fine. But if if global markets head into a recession towards the end of the year, then are you looking at the possibility of resuming the lows that we saw last year, or has that been ruled out entirely on the charts?
I don't think it is. See, nothing is ruled out. Yeah. But the fact is that even in the consolidation that we're talking about, you'll find that the S&P and all are making higher bottoms. A higher bottoms is always a very good, when markets, like see India, since Jan, we are making lower tops. In the sense that, each time we pull back, 18,800, 18,200, 17,800, now we are getting there. So that is the nature of a downward sloping trend. But in the US, etc., you'll find they're making higher bottoms. That's why global markets are relatively outperforming India. So that sort of base. So you cannot rule them out, but always higher bottoms gives you a sign of confidence. And so there are things like recession. Now, is it a deep recession, elongated recession? How will the Fed pivot? There are huge amount of variables to it. We can, as I said, fill the narrative. We can do the storytelling. But if you really look at the market, you will see that in the last 3 to 4 months, the US has making higher bottoms. The breadth is improving. Even tech as a sector, which was the Achilles heel of the market, you'll find it's repairing. Even in India, if you see, some mid-cap tech stocks are doing phenomenal. So I feel that these are all interesting themes. Nothing overarching, painful, excruciating, but in that also look at silver linings. And in simplicity, if you want to summarize it, look at 52-week high versus 52-week lows. You get clarity on that.
Where else in this subsectors? Electrical equipment is one you said. I mean, industrials largely, but outside of that, where else, Atul?
Again, auto ancillaries. We like to look at auto names. We look at auto numbers, etc. The big 3, 4. But if you look at ancillaries, Prashant, there's a lot of interest happening there. Even in that, if you drill it down to those linked to electrical mobility, you'll find that those stocks are actually also doing well. So you will have certain themes, they're micro themes, they're playing out. But I guess the screen, the markets, and then we have result season coming up. So all these things will ultimately get cemented because wherever the results are not there, those stocks will give it away. But if you start even seeing results, then I think you got a wonderful picking for your portfolio.
As they say, there's always a bull market somewhere. You just have to find it.
Absolutely. Money never sleeps.
Which has been a hard find in India, right? We've been looking for the bull market for a very long time. But Atul, pleasure speaking with you. Thanks a lot for joining in.
Thanks, guys. Thank you for having me.
Have a good one. Since you spoke about autos, we want to take that theme forward because, we have one of the largest players in the market. So CNG prices have fallen over the last many days, and that has, of course, the prices have reduced by 8 rupees per kg. It's a positive boost for Maruti CNG passenger vehicles. So to decode how this price cut will impact the sector and the company itself, we have the management, Shashank Srivastava, who's the Senior Executive Director, Marketing and Sales at Maruti, who joins in. Mr. Srivastava, good morning and thanks for joining in. So CNG prices have fallen. Can you tell us on the industry as well as a car manufacturer like yourselves, what would the impact be?
Well, first of all, the positive impact, I believe, would be the penetration of CNG vehicles in our portfolio should increase. And I would also imagine the number of inquiries and the bookings, which are the demand parameters that the industry tracks, should be very positive for CNG. And I think that's largely because the running cost with respect to the gasoline or diesel vehicles will come down with the reduction in prices for CNG. And the running cost would probably now be around 2.7, 2.8 rupees against 4.8 or a 5 rupee for a diesel or a gasoline vehicle. So the running cost comes down, obviously renews and strengthens the interest of consumers in CNG vehicles, which would reflect in increased bookings and inquiries.
Okay, interesting. So you're saying that the running cost now will come down quite a bit compared to other vehicles. So CNG vehicle, the running cost will come down to 2.8 rupees, right?
Per kilometer, yeah.
Oh, okay.
Mr. Srivastava, what has been the growth so far in FY23 in CNG vehicles, and how much market share do you currently have in the CNG space?
So if you look at the passenger vehicle industry last year, that is 2021-22, was about 290,000. And out of which Maruti Suzuki roughly was about 234,000. But 22-23, that is the last financial year, this increased to 435,000 for the industry. And for Maruti Suzuki, it increased to about 329,000. So that was a jump of more than 50% last year as well, thanks to, and this is despite the increase in CNG prices, since June of last year, which reduced the gap between gasoline diesel prices versus the CNG. Despite that, we saw this huge increase. And that's also, of course, because Maruti Suzuki introduced many models in the CNG in addition to what they had in the previous year. And for us, the market share in the CNG market is about 75%. And in our portfolio, the penetration of CNG vehicles is now close to 21%.
Okay, so 75% market share is what you're sitting on in the CNG market. Got that. You said that in FY23, the number of CNG units sold was about 329,000. How much could that rise to in FY24? What kind of growth are you looking at?
So for the next year, that is 23-24, okay, the current year, 23-24, the projections for Maruti Suzuki for CNG is roughly between 4.5 to 4.7 lakh. So that's a substantial growth over the existing 329,000 that I just mentioned. And I think after that, of course, because of the base effect, the growth will plateau because the very few models will remain where we will not be offering CNG. Currently, we are offering 14 vehicles out of our 17 models with CNG. And going forward, we are looking at projections up to anywhere between 600,000 to 700,000 units.
Oh, so 329,000 in FY23, but the projection is 600 to 700,000 units. What is the timeline? Which year are you looking to achieve it in?
So it will take a couple of years actually, because next year we are hoping to achieve that 4.5 to 4.75 lakh range. So it really depends on the fuel prices, especially not just the CNG prices, but the gasoline and the diesel prices. So if you see an unusual spike in the gasoline prices, that obviously works in favor of the CNG. However, a dip in the prices for whatever reason in gasoline or diesel prices makes the gap with the CNG a little lesser and therefore is a negative for CNG.
Mr. Srivastav, any more launches in the CNG space you're looking at?
So we have just 3 more models where we don't have the CNG. So depending on the market response and our assessment of the market, we will look at whether we can introduce the CNG in the other models as well. But of course, apart from the difference in the running cost, which comes primarily from the difference in the fuel price of CNG versus the gasoline and the diesel, the other thing is that the penetration of CNG in terms of the number of retail outlets, the pumps itself has been increasing. So this, for example, in 22-23 March, last month, the total number of CNG stations in our country were 4,709. But this is going to increase to 8,750 next year, and the year after to beyond 10,000. And that is, of course, one other stimulant which is there for CNG vehicles, because one of the barriers to CNG adoption so far has been the long queues at the pumps because of the paucity of number of pumps. And now that is getting removed. In fact, in the next 2 years, there will be more than double the number of outlets that we have today. So that's again a very positive stimulant for CNG sales.
All right, I just want to confirm that, sir. You're saying that CNG pumps will double in the next 1 year?
That is in 2026 March, you will have more than 10,000 pumps. So that's how it's more than doubling from the current numbers of 4,710.
Oh, wow. So more than 10,000 pumps, which automatically means that the penetration will rise in the CNG market, right? Earlier you mentioned that the penetration is about 20%. How much could it rise to, you think?
So it could be as high as 30%. In fact, next year itself, it should be close to 25%. So in the next 2-3 years, it would go up to 30%. And again, that all depends on how the fuel prices, pan out for gasoline and diesel, as also the CNG.
Let's end with one concern that the street has on the small car segment. Mr. Srivastav, Goldman Sachs, a sell-side broker, has downgraded the Maruti stock due to concerns about the growth in the small car segment. What are you seeing incrementally on the ground, and what is your expectation there in terms of growth?
Yeah, so if you look at the last year figure itself, we had seen in the small cars a jump of almost 20%. The small cars hatches segment ended up with about 13.5 lakh vehicles against the total volume of 39 lakh. The previous year, by the way, the hatches were just 11 lakh 40,000 or so. So there has been a big jump in the hatch sales of last year. But I did read the Goldman Sachs report, and it's also. And I mean, I tend to agree with that report a lot, because one of the reasons why the small car segment has been declining is on the affordability factor has been coming down. The prices in this segment have been rising faster than the income levels of the consumers of this segment. And I think it will depend a lot on the economic growth and the income level growth for these lower end segment. If that happens, of course, we can expect the segment to grow. But the chances probably look as if the prices probably will go up faster than the income levels, and that is why those projections for the small car. But for us, for next year, we have said this segment will be around that 35% mark, which it currently is of the total PV industry.
Okay, all right. We will leave it at that. Thanks a lot. That's a big move in the CNG market. Of course, CNG prices have fallen, which means that CNG vehicle demand will go up. And that's Maruti speaking about how penetration currently from 20% will rise to about 30-35% in the near future. Let's slip into a quick break on that note. On the other side of the break, we'll connect with Itira Davis, who's the MD and CEO of Ujjivan Small Finance Bank, to discuss their Q4 numbers. Later, we have our favorite quarter se quarter tak segment. Ekta will analyze the expectations from the pharma sector in Q4. We will also be joined by Vishal Manchanda, who's the pharma analyst at Systematics Group, to discuss expectations from the pharma space. Stay tuned.
Welcome back. Well, the markets continue to hold well in the green. It appears we're moving towards the 17,800 odd mark, but the big Q today is going to be the CPI data. That'll be the global Q. And from the domestic Qs, we'll be waiting by for the IT companies that kickstart their earnings. For the time being, though, let's focus on the finance space as well as the banking space. Ujjivan Small Finance Bank, well, it's the next corporate on our radar. We're speaking to them post their quarter 4 update. The company has seen a robust dispersals, which aided the loan growth as well this time around. Further, there's also a reduction in stress, which has seen the gross NPAs come down to around 3.6% from over 5%. To discuss this and more, we're joined by Mr. Itira Davis, the Managing Director and Chief Executive Officer of the company. Hi, Mr. Davis. Good morning. Thanks so much for joining in. Well, give us some sense about this growth first. Has it come because of an increase in clients, or is it that the ticket size has moved up? Give us a broad understanding.
Good morning, Nigel. It's good to be back here with CNBC. A good question about how the growth has taken place. For us, the growth is very broad-based. We have seen after the initial couple of quarters during the year, which was mainly based upon existing customers with new loans to them, we broadened the base by going into new customers. Because the economy also picked up and showed us signs that that risk was worthwhile taking, and we moved in that direction. So our 33% growth in the OSP for this year has come from a combination of existing customers as well as a good number of new customers. The ticket size has remained more or less the same, because initially the ticket size went up a little when we were dealing with existing customers. But as new customers came in, the ticket size fell a little bit and is back to what we have normally during the pre-COVID levels.
Okay. So what kind of overall, I mean, the disbursals are very strong this time. Even in the quarter gone by, the AUM growth has been about 33%. On an average, what do you think you can do in the full year? And, you know, also for FY24 is what I'm asking. What kind of sustainable growth do you see?
Yeah, the growth in OSP will continue in the new year, and that is the objective. Whether it will touch the 33% that we have seen will be determined based on how things span out in the first quarter. You know, we are looking very carefully at interest rates. Right now, there's a pause in the interest rate movement. If that continues and it stays at these levels, then, you know, we can look at some interesting numbers for growth. But if the interest increases, RBI does another 1 or 2 increases in interest rate, then the market is going to be a little bit more challenging, and the numbers will also have to play out on that basis. So growth is there for us. We have forecast a good growth, but all of it will depend upon interest rates and how they move.
Just one follow-up. You said the market could get a bit more challenging if the rates move up further. But have you seen any impact already? I'm asking because you cater to a lot of segments, you know, the MSC segment, micro-financing, and these are pockets that have been under pressure now because of rising interest rates as well as inflation hitting pockets. Any impact that you've seen so far, either in terms of growth or even on asset quality?
No, loan demand remains good, so that is not a problem at this point in time. But, you know, if a couple more interest rate hikes, we have only had 2 interest rate hikes on the lending side for the whole period from last May when the interest rate started moving up, or when RBI started raising rates. We have had only 2, you know, movements on that front. Whereas on the deposit side, there's been several more movements. And as you well know, during March, there was a big scramble for deposits, and we saw several banks pushing interest rates up. And that has sort of slowed down since RBI did not raise interest rates at the beginning of this month. But if that scenario continues to play out, and we see a couple more interest rate hikes, the deposit mobilization will be a challenge. And then that will have to be passed on to the customer. So then how does the customer react to higher rates on the loan side is something that we need to see. But for the moment, Ujjivan is very comfortable. We are very liquid. We ended the year beautifully with high liquidity. We, in fact, anticipated this interest rate cycle. Because of my gray hair, you know, I have seen these cycles a few times, and we anticipated and took those decisions early enough, first in August and then in November. So we were well placed in terms of mobilizing deposits, and we didn't have to join the scramble in March. So I think for the moment it looks good. First quarter is looking good as well, but let's see how it all plays out.
All right, Mr. Davis, but you know, with the current scenario, I mean, assume that the RBI has paused and maybe there's one more rate hike that they could look at. What kind of a number are you looking at? You know, loan growth and NIMs, as well as if you could give us some color on your restructured book for the coming year, that's FY24.
Yeah, I mean, at this stage, I would rather wait for our final numbers to be announced next month in May, and then, you know, talk about the book and the growth. But let me just assure the market that it's going to be in the range of 20 to 30% growth in terms of the balance sheet. Now, whether it comes towards 20 or 30 will depend upon how interest rates play out during this year, during the first and second quarter. And then, you know, I can give you a firmer number as to how we're going to zero in on which side of that 2030.
We'll take that broad range for now. And as you said, when your numbers come out, we'll have a chat and you'll give us, you know, more concrete numbers. But what about NIMs? I think you're at around 9.5% or thereabouts as per last reported. Where is that?
Yeah, NIMs for 22-23 was very good. It would have ended around 9.5. For this year, again, there will be some challenges on the NIMs, but I don't see it falling below 9.3% is my best estimate at this stage.
Okay. What about new products on offering? Anything in the gold loan space that you will be looking at? There is a lot of competition here as well. Would you be looking to take competition from NBFCs? Any thoughts?
Yeah, the gold loan is an area which we have test marketed. We are now ready to go into it, you know, with a larger business. I think, you know, we are looking initially at our own customer base, because right now, since we don't offer it, many of our micro banking customers are going to other people and other banks and getting those loans. We try to get them back, and we'll offer that product to them. So that will be the start, and as we then build up, we will be looking at new customers. So I think our reach across the country will help us on that regard. We have now about 629 branches, and we'll be adding another 100 branches during this financial year.
All right, 100 branches. And what is your base currently, sir, in terms of branches?
Sorry, I couldn't get that.
As of now, what is your branch base? And you're looking to add 100. I missed the first number.
629.
629,
branches.
and looking to add 100. All right. Final question before we let you go. We need to clear some rumors as well. Is there any possibility of Ujjivan Small Finance Bank getting merged with any other entity?
Well, there's nothing that I'm aware of, and nothing being discussed at the moment. We are focusing on the reverse merger. That is, to that extent, there is a merger, but it's the holding company being merged into the bank. So
that we're aware of. That we're aware of, but anything else we should look forward to? I think at this moment was the crucial words that I picked out of that statement. Do you think there could be something in the offing post that?
Well, after the the reverse merger is completed, we are open to look at all options on how we grow, how the growth takes place, and how we go forward. So yes, it's one of the possibilities after the reverse merger is completed.
Okay, but anything in this calendar year itself that we could look forward to?
Not in this calendar year. Bit early for that.
Okay, all right, got it. Thanks a lot, Mr. Davis, for joining in. Pleasure speaking with you on CNBC TV18. Well, that's the word coming in from Ujjivan Small Finance Bank. The market is still very quiet, so not too much happening. The good part is that the Nifty is holding on to its gains from the last 7 days, piling on a bit of gains now, 40 points higher, but nothing exceptional really in the market, just sort of chugging along on the upside. Let's then take a breather from tracking the markets minute by minute and get you some expectations from what to look forward to in the pharmaceutical space this quarter. Ekta is here for more. Ekta, over to you.
Thanks for that. Well, yes, pharma companies are expected to report around a 14% revenue growth, with margins estimated to be stable to marginally improving in the band of 22 to 24% on a consensus basis. The key growth driver this quarter is expected to be the US business, which is going to be aided by key launches such as the cancer drug Revlimid generic and some stability in price erosion and additional supply opportunities as some companies have looked to exit key drugs. Q4 is usually weak for India, but could be supported by a strong flu season. Estimates are India is likely to grow anywhere between 9 to 12%. Factors such as the impact of price cuts from the NLEM revision will be watched closely. Margins of around 22 to 23% supported by improved raw material and logistic cost pressures, and Q-on-Q stability in drug pricing is something that we could expect. Stock-wise, Dr. Reddy's, Natco, Cipla, Zydus Life are all key beneficiaries of Revlimid generic. Sun Pharma is likely to see continued traction from sales in the specialty business. Watch for the impact from the IT security incident, Halol import alert. Commentary from Lupin on Spiriva generic and Aurobindo on the injectables business will be watched closely. Biocon should be aided by full integration of the Viatris biosimilar acquisition. Domestic growth is expected to be steady for the likes of Torrent, JB Chemicals, Alchem, Glenmark. API companies are likely to see improved demand, aiding revenue. Realizations could continue to be pressured due to excess capacity. Margins, like pharma companies, will be aided by the overall decline in raw material as well as freight costs. From the API companies, a Q-on-Q recovery in Divi's Labs, margins will be closely watched on a sequential basis. Diagnostic companies should see mid-single-digit revenue growth Q-on-Q, with margins sustaining anywhere between 24 to 26% for Dr. Lal's and Metropolis. Hospitals could possibly report stable to better occupancy sequentially due to factors such as stable surgical revenue and increase in medical tourism. And specifically in the hospital space, for Apollo Hospital, the progress on Apollo 24/7 will be watched quite closely.
All right, thanks a lot, Ekta, for that. So let's hope a stable performance comes through for the pharma sector. But the stocks have not been doing too badly. In fact, Dr. Reddy's has been one of the big gainers this year. It's up almost about 15-odd%. Vishal Manchanda, who's the pharma analyst at Systematics Group, joins us now to tell us what to expect. Vishal, Ekta put it, across to us about the entire sector. So out of all these pockets that we're looking at, the API space, the diagnostic companies, what stands out for you as one of the big performers this quarter?
So I think among the formulation names, the larger names, I think Zydus Life is one which should do the best in terms of earnings performance on a quarter-over-quarter basis. So they are the best in terms of the incremental launches in the US. Zydus is best poised. While I think all others, Sun Pharma has got some supply issues they need to deal with. Dr. Reddy's largely depends on how Revlimid does for them on a QOQ basis, because what we have seen is there has been market share erosion for Revlimid in the US. And we are, so specifically in case of Revlimid, there is the market share and sales do not correlate very well. So we are not very sure how Revlimid behaves for them, but there is a possibility Revlimid might show a dip in case of Dr. Reddy's. But let's see how it pans out. But otherwise, Dr. Reddy's ex-Revlimid business is doing well for them in the US. We also need to watch out for how the NLEM headwinds play out, because there has been ceiling price revision this quarter. We had seen notifications from NPPA on reducing ceiling prices of drugs. So those ceiling price revisions impact is something we'll have to see how it impacts the numbers. It should be 100 or 200 basis point. That's what we are expecting.
All right. Hi, Vishal. I heard your view on that, but I wanted to particularly ask you about Divi's Laboratory. The last few quarters, the street is very, very cautious because the management in terms of margins, they're not really giving a concrete number. They're saying for the few quarters, it could be soft. Today, the stock is up closer. The Divi's Laboratory stock is up closer around 5%, Vishal. Any reasoning for that? I mean, have you picked up something?
I can't get you. I'm sorry for that.
Vishal, are we audible right now? All right. Fine. I think we have. Okay. I think we'll get that fixed. But Divi's Laboratory, that's the big gainer today. It's up close to around 4.5%. For the last few quarters, the street has been a little bit cautious because of margins. They've seen a fair bit of contraction, and there's no visibility, at least as of now, concrete guidance that's been given about when does it recover. But just take a look at it. Last 1 month, it's come back in style. It's up close to around 10%. And half of that actually has come in today's trading session itself. But from the peak, it's seen a fair bit of correction. Vishal's back with us. Vishal, I hope I'm audible right now, because I wanted to ask you about Divi's Laboratory. That's seen a sharp correction from the peak, but today the stock is up 5%. Any fresh piece of news that you've picked up?
So I don't really think there's a news on Divi's, but for sure the previous quarter that we have seen for Divi's was the bottom, and we are going to see growth from that number. So probably we'll see some margin improvement, and we'll also see sales improvement in case of Divi's, because the COVID supplies had completely tapered off, and now they can grow on the base. So it's going to be a positive trajectory for them from here on.
You want to give us a couple of numbers about what kind of margin improvement are you factoring in, for Divi's, or what kind of growth estimates you have?
So I would like to put it on a quarter-over-quarter basis. We are expecting around 3 to 4% growth on a QOQ basis on top line, and about 100 basis point improvement in margins.
Okay, 100 basis points improvement in margins. Ekta was just telling us that there is a sequential mid-single-digit revenue growth that she's expecting with a margin expansion this time around. We'll keep Divi's on our radar. But, the other stock I wanted to chat with you about was Dr. Reddy's. It's had a really smooth run this year. I mean, if you look at the movement, Dr. Reddy's is up almost 15% in 2023 already. And looks like it's going to be a decent set of earnings as well. An EBITDA growth of around 30%, revenue growth of 11%. But what are the big triggers for Dr. Reddy's, you think?
I think what the street is waiting for in Dr. Reddy's for a larger upside from where it is today is people are waiting for them to get more large approvals in the US. So Revlimid is one they got a year back, but people want to see what is there beyond Revlimid. And that's where I think the larger re-rating stands. And the other trigger would be they kind of gaining traction in China market. So those two triggers would potentially be the re-rating triggers for the company.
Okay. And one last word on the diagnostic companies. You know, there was, of course, a lot of pricing pressure that these companies were facing. What is the expectation in this quarter? Do you think that margin pressure is something that can extend into Q4 as well? And what's the call on these stocks now?
So we don't have a coverage on the diagnostic and health, the hospital space, but these remain, the diagnostic and hospital space are structurally well poised for growth. There are hiccups because of the pressures we are seeing on account of the digital players getting aggressive in here. But I think pricing is now getting better versus so the price cuts that we had seen by digital players is getting reversed. So I think the sector should improve from where it is. Plus the COVID base has been reset now. We don't have that base giving a pain.
Okay, thanks a lot, Vishal, for joining in, and have a great day. That's the expectation from the pharmaceutical space. Well, for the market, it's looking pretty good actually. 30 points higher now on the index. The sensex is up about 60 points. So we'll try and understand whether this market can build on to its gains on the other side of the break. Stay tuned. Mitesh Thakkar will be with us in a bit.